everyone, me Kevin here. Here is a full update on what's going on with HouseHack, the fact that warrants are now due, that's a big deal, our fundraising plan, and our phase 2/profitability plan. This is very important, so let's buckle up and get into the update. First, we suggested there might be another fundraise for HouseHack at maybe a $2 valuation per share. At this point, we are shelving that idea. There is a lot of labor that's involved in doing a fundraise, and right now we would rather focus that labor in areas where we think HouseHack is going to be more profitable. Something that's a lot easier to do that doesn't require actually doing an offering and working with new investors and regulation and the SEC is calling warrants. So we're going to do that instead. We're going to now call warrants due. That means from the day this video is posted, warrants will expire in 60 days if you don't exercise your warrants. And I'll explain more details about warrants in just a moment, but quickly so you understand why and the mechanics. While yes, it is possible we might fundraise again in the future for HouseHack or our mini funds, right now we are tabling that idea and instead we are just going to call the warrants due. Again, most of that has to do with an allocation of company resources, and if we can get to profitability without having to go through another Reg D or Reg A fundraise, it'll take a lot of stress off of the team and let us focus on what matters most right now, which is phase 1, acquiring deals, stabilizing deals, property management, leasing, tenants, and systems and procedures, packaging those properties up, and selling them strategically via phase 2. We call phase 2 mini funds. Mini funds are just basically a way that we can put properties, good quality, stabilized assets into either a different kind of fund with a future offering, a REIT, whether it's private or public, a DST, a syndication, a partnership, whatever. And basically people can buy slices of that partnership or whatever it might be and get cash flow from the underlying real estate. So think about HouseHack as the company that does the cycles. We buy the property, we buy the fixer, we fix it up, we rent out the property, we stabilize it. Then essentially you roll it to the mini fund where you have an end investor who takes the residual cash flow from the rental property income. The difference, or how HouseHack hopes to make money, is that we sell the properties at market value that we believe we were able to get in distress for below market value, and then we put in our fix-up money and our investment or our time into stabilizing the property. Once it's stabilized, great, we sell it for a bit more at market value, and HouseHack takes the difference. So basically, HouseHack is making real estate functional and then selling functional real estate to a mini fund. Then somebody who invests in the mini fund can get dividend yields and can get appreciation. And the way we want to incentivize people to enjoy those mini funds is basically, hey, you can diversify into mini funds and we won't charge asset management fees, acquisition fees, disposition fees, renovation fees, financing fees, all of the crazy fees, the waterfalls, the appreciation splits, the 80-20s and the 65-35 splits that you see, all of that, zero. Because we think we're getting such a good deal on the buy from the seller that once we're stabilized, we can sell it at market value, not charge any fees, and still make money. So basically, the seller subsidizes HouseHack, and in the same way, HouseHack is able to repeat the process by utilizing mini fund structures to allow people to invest in real estate directly. So again, phase 2 is coming. We have not done a phase 2 before, so that's going to be new, and there's going to be risk that comes along with that. But we have an internal goal of hitting $50 million in assets to create our first mini fund. So think about it this way. We basically buy wedge deals, fix it up and rent them out. We get to $50 million in assets, boom, once we cross that threshold, we create our first mini fund. We're pretty close to being able to do that now. We think if we exercise somewhere around 50% of the warrants we have, we should be good to get to doing our first mini fund. We think our first mini fund will probably be launched in the third quarter. So as an investor in HouseHack, you'd get the benefit of a valuation increase at HouseHack, hopefully, if we're able to successfully go from phase 1 to phase 2 and then repeat the cycle. HouseHack is all about that cycle. phase 1 to phase 2, phase 1 to phase 2, phase 1 to phase 2. And every time we do that, we hope we can make money. In fact, the goal is if our first mini fund for Q3 goes as planned, and again, it's a hope, it might not work, we hope to be gross profitable and net profitable for 2024. And then all it is, okay, cool, the hamster wheel has been built, now let's grow it, right? And how fast can we run it? How fast can we spin the wheel? How many times can we do quality cycles, giving people access to no-fee real estate while increasing our revenues? And obviously bottom line, which is earnings per share for all of the shareholders, or would be represented as earnings per share for shareholders. And then at that point, we could start thinking, okay, what do we do? Now we have retained earnings. Do we distribute, stock buybacks, dividends, stock comp? What do we do? And obviously all of that is going to come later when we figure out what's going on. So that's the game plan. Now, at this point, we think HouseHack is worth over $2 per share, but that's solely based on what other real estate sort of holding companies are based on. It's not based on mini funds at all. It's just sort of based on, okay, you all bought real estate and it's stabilized or getting stabilized. What is that kind of company worth? $2 to $2.30 a share maybe relative to the $1 invested at HouseHack. But we don't know because we're also comparing ourselves to established companies. So that could be wrong. And we haven't done mini funds yet. Mini funds could hurt us or it could substantially increase the value of the company if it works really well. It could 10, 20x the value of the company. We have no idea though. We have not done that. So it's unrealistic to say that will definitely happen. And, the $2 per share, which is what ideally we would fundraise at if we were to fundraise again, is based on our opinion, not an independent third-party valuation. So what are warrants? Well, warrants are kind of like a stock option, except rather than being a contract between you and somebody else selling you shares, they're a contract between you and the company, HouseHack. If you invested in HouseHack between September 2022 and March of 2023, then you were essentially, as an additional benefit of being an early investor, given warrants. HouseHack warrants are being called starting today. If you want to know how many you have, you can go to the website and calculate it. It's pretty simple. I will link that down below, so you have it in the description, but it'll be at househack.com. And then I believe the domain is 2024 warrants with a hyphen in between. Yes, it is. So househack.com/2024-warrants. And that'll be where all of the information is in terms of how you can redeem these warrants. So what happens, or at what valuation rather, do you get to redeem these warrants? Well, the warrants were promised at $1. We've got a total of about $13 million of warrants outstanding, so we want to basically get rid of all the warrants. We don't want to go forward anymore with anybody having the opportunity to invest in $1. So basically, if you don't take advantage of the warrants, and if you have warrants, they will expire worthless after April 8th, 2024 at 5 p.m. So in other words, if you call us on April 9th, 8 a.m., and you're like, hey, I want to invest in warrants, or like I want to exercise my warrants, we can't do it anymore. So make sure that if you're interested in exercising your warrants and investing in HouseHack anymore, and you were an accredited investor who got warrants between September of 2022 and March of 2023, you ought to go to househack.com/warrants or 2024-warrants. There we go. Again, the link will be down in the description, okay? So we just want to make that clear. This isn't supposed to be like a pressure thing. It's just literally what we put in the contract when we did our Reg D offering in September of 2022. We said at some point in the future we'll call warrants, and when we do, you'll have 60 days. And after those 60 days, they'll expire worthless. So just giving you that heads up. You got 60 days. I probably wouldn't wait until the last minute, though, because you don't want to run out of time. Again, you don't have to. These are an option, so you don't have to invest more. And it's only for the accredited investors. So if you invested in the Regulation A non-accredited round, which was done through Dalmore, and yes, we're still finalizing share certifications from that round with investors. It has taken way longer than it should have. And we are, at this point, we feel like we're doing a little bit of Dalmore's job to get it done, but that's okay. We're working closely with them. There's some frustration between the companies, but I think we can solve it. They're nice people, but we've got to get numbers properly reconciled. And when they're perfect, which they're close to perfect, I think we've got a handful of investors left that just need a little bit of reconciling. I think it's actually $400,000 that's left. So like literally, if you're wondering where are my stock certs from the Reg A, we're $400,000 of reconciling away from issuing the stock certs. So we think that should be done here by the end of Q1, which would be March 31st. It is what it is though, because part of it is totally out of our hands because the money went to Dalmore. When the money goes to us, it's a little faster because we're doing it. Anyway, so anyone who invested in the accredited round, probably has warrants, and there's a table on the househack.com/2024 warrants website, dash warrants. And on that table, you could sort of calculate how many warrants you have if you're not already aware of how many warrants you have. If you have questions, email us at ir@househack.com. But anyway, the point of all of this is if we raise, let's say, another 10 million, 5 million, 4 million, somewhere in that range, we should be good enough without a fundraise to get to mini funds. And we want to launch our mini fund, our first one, in Q3. So by then, we would hope to have $50 million in stabilized real estate for our first mini fund. Again, it could be a REIT, DST partnership, syndication. We don't know. We haven't done that before. But the cool thing is, if we can get that first round sold for $50 million, where people are investing in no-fee real estate, it's like, swiping up and investing in no-fee real estate, then we believe we can go gross profitable and net profitable for 2024. But again, it's entirely going to depend on our ability to entice people to buy our mini funds. So we'll see. We're just going to do our best. At the same time, we're expanding our partnership with investment advisors, banks, fund managers, who might also be interested in our mini funds. So we've got a lot of different irons in the fire, and we're really excited. Now, in terms of company-specific updates between now and then, we need to finalize the acquisition of the multifamily deals that we're in. We're probably in more deals than we should be in right now. So but that's okay, because one of them is sometimes we're in a deal and we're like, okay, yeah, this is like going south. The seller's disclosures are wrong. They don't line up with what they advertised. And then we're kind of like, hey, look, with this new information, we're at this price, but with that in mind, like it's fine. You don't have to sell it to us. You'll sell it to somebody else. We'll mutually break up. That's normal. That's called day in the life of real estate, okay? Seller's like, yeah, here's my rent roll from August. And you're like, bro, this is very and substantially different from what we have here at the situation in January. Well, then that's a deal that we don't buy, right? So that's all part of the due diligence stuff. We do that on a daily basis. So whether it's deal acquisitions, deal negotiations, due diligence in escrow, insurability, repairs, dealing with tenants, credit scores, screening, bill pay, accounting or audit, all of like the normal stuff of a company, obviously that's still going on. I don't want to sound redundant about that. Duh, that's happening. And so obviously that's a lot of work as well. Property management is a job, but we know that and we're okay with that. So that's all part of, though, where we think we make our money, which is cool. We took properties in distress, stabilized them, and then sold them for no fee. Well, that's great. Now we have a cycle where we get our original capital back, hopefully, with a profit, which pays for the staff, and then some, hopefully. And then we keep redoing the cycle. Once we get this first cycle done, if it works out, I have no idea, I'm speculating, but I think the valuation of the company could be a lot larger than what we had hoped with just sort of acquiring real estate and like, cool, we acquired real estate. Like this cycle process is really a big deal. So we're close, which is really exciting. But again, now we're calling warrants due, specifically because it just allows us to focus on the actual mechanics of the business without having to go through repeated offering processes, whether it's with Dalmore or the SEC or otherwise, because this was already done, right? Anybody who has warrants already signed up via an offering that was Regulation D registered. So it's not like this is a new offering. And unfortunately, that means we can't take new investments beyond warrants at this point. Anyway, hopefully that all makes sense. If it doesn't and you have any questions, go to IR or email ir@househack.com. Keep in mind that when you go to househack.com/2024-warrants, link down below, you're going to be asked to fill out a DocuSign. It should be pretty self-explanatory. There's a giant chart on the page that makes it very, very clear how to calculate how many warrants you have. And fill out the DocuSign, sign it, wire over your money. Then we'll reconcile it all. We'll communicate with you through email, and we'll reconcile it all. And then we hopefully can issue the new share certs for those who bought their warrants and the Reg A all at the same time. Close that door once we're, at the end of Q1 into Q2. Then get to focusing on our Q3 mini fund, launch that in Q3, which we set up during Q2. Boom, the cycle begins.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.